In this video, we review the current weekly charts of Treasuries and the Euro. Setups are present that tell us to be open to the possibility of trend reversals in both markets. Prior to looking at long-term Treasuries in the Euro, we will review a similar setup that appeared on the S&P 500's chart in March 2009. This video does not call for reversals in any market. Instead, it covers setups that may lead to reversals. Now we're going to look at some potentially bullish and bearish divergences that are showing up on weekly and daily charts. As we scroll through here, obviously at any point you can pause your video player down here in the corner. Anything that occurs in technical analysis on a weekly chart is more important than anything that occurs on a daily chart, and anything that occurs on a monthly chart is more important than a weekly chart. So as we go through these, the majority of them are weekly charts. Some of them are daily charts. You can discern the importance of the signal based upon whether it's a daily or a weekly. What are we looking at here? This is a historical example to show you why this can be important. This is price, and all we're doing with these aren't trend lines. We're just connecting points. So this is a low, this is a low. You get what's known as a bullish divergence when price makes a lower low, so this is lower than this, and an indicator makes a higher low. So this is a big, huge jump up and down, glaring bullish divergence at these March 2009 lows, and it occurred on a weekly chart. Some of the ones that we're going to look at now aren't this pronounced, but when you have bullish divergences on weekly charts, what it's telling you here is that the bears are losing their grip on the market and losing their enthusiasm to sell. And what you've really got here, this is the last wave of sellers that finally throw in the towel. And this divergence tells you from a probabilistic standpoint that this is a good entry point, especially once price confirms it and moves off of it. So everything in technical analysis, and in life for that matter, concerns probabilities. So the fact that we're seeing bullish and bearish divergences on some of these charts that we're going to show you doesn't mean anything until price confirms it, and even after that, we're still just looking at probabilities. Price makes a higher high, and you can see the indicator makes a lower high. The slope of this line for price is up. The slope of this line is down. This is a pretty pronounced bearish divergence that says be open to a reversal in Treasuries, and if Treasuries are going to reverse in a bearish manner, that would tend to be bullish for the euro, it would tend to be bullish for commodities, bearish for the dollar, and bullish for stocks. This is shorting Treasuries, a double short of the 20-year U.S. Treasury bond. This is a fairly significant bullish divergence on a weekly chart. If this were to move higher, that tends to be bullish for risk assets and bearish for Treasuries and bearish for the dollar. This is the euro on a weekly chart. We're connecting points here. Again, this is not a trend line. This point and this point. When we made this new low here, MACD was all the way down here. We're making a much lower low here relative to this point, and MACD is making a higher low. That's a pretty pronounced bullish divergence here. And if you understand the markets, when the euro has been weak in recent years, really, it tends to be risk off. When the euro is weak, the dollar is strong. So what this is telling you is this divergence is saying stocks could bottom relatively soon. The dollar could reverse relatively soon. And if you're loaded up with Treasury bonds or bonds of really any kind, the more conservative they are, the higher the risk they would be for a reversal. Again, speaking in probabilities here, but out of the divergences we're going to look at today, this is probably the most pronounced one and the most bullish. How you use it, it just tells you to pay attention. Price needs to confirm it. Other things need to happen. The divergence in and of itself is not a reason to buy. The material in this video has no regard to the specific investment objectives, financial situation, or particular needs of any viewer. This video is presented solely for informational purposes and is not to be construed as a solicitation or offer to buy or sell any security or any related financial instruments, nor should any of the content be taken as investment advice. Any opinions expressed in this video are subject to change without notice, and Shavako Capital Management, LLC, or CCM, is not under any obligation to update or keep current the information contained herein. CCM and its respective officers and associates or clients may have an interest in the securities or derivatives of any entities referred to in this material. CCM accepts no liability whatsoever for any loss or damage of any kind arising out of the use of all or any part of this material. We recommend that you consult with a licensed and qualified professional before making any investment decision.